We're heading for a period of very low inflation again. In fact, if we continue to see commodities come off and oil come down, inflation is going to be reversing all the uptick that we saw in the first half of the year, which makes it quite incredible why central banks are suddenly in unison, holding hands and saying, now is the time to hike to show we have confidence. The only interpretation I can put on it is that collectively central banks tried negative rates, ultra-low rates and QE, none of which have worked to actually generate a real recovery. And the markets actually told them, look, you're actually not increasing business investment because we feel we don't have confidence because you're showing you don't have confidence by this. So now they're trying the opposite tack, which is to say, hey, we're going to put up rates just to show how confident we are and hope that businesses say, you know what, it's going to cost me more to borrow next year. Now's the time for me to give pay rises and start investing. That's very much what they hope is going to happen. It sounds delusional, and it is, but that's what they're going to try and do.
Oh, okay, this is interesting. So let's take a step back. You know, for currency markets, okay, for quite a while it was divergence because the Fed was, going their own way, normalizing. Everybody else was still on the floor in terms of rates. Then in just the last week, maybe 2 weeks or so, the story suddenly became convergence, right? When the ECB and even, the BOJ looked like they were starting to follow the Fed. Now with these latest minutes and this growing dissension in the Fed over inflation, have we flip-flopped back the other way now? Are we back to divergence with the Fed slowing down when everybody else seems to be trying to normalize?
Possibly. I mean, the Fed is completely split because the US economy is completely split. And I think parts of the Fed understand that we are in a completely new normal where the Phillips curve is broken, and parts of the Fed simply don't. But they can't get too out of step with what everybody else is doing, given that they are the world's most important central bank, without them really undermining the effect of what everybody else is trying to do. So if the ECB and the BOJ and the BOE and the BOC are all moving in one direction, I think they're pretty much going to cajole the Fed to go with them. What's most interesting is, even though you can see the momentum for a weaker dollar is still there, because everybody else is now much more hawkish relative to the Fed, very, very suddenly, the thing about quantitative tightening, which they're talking about, or starting to run down their balance sheet, that really is a wild card. I mean, they admit themselves they didn't know what they were doing when they introduced QE. That was a leap into the dark. Well, to talk about reversing that, you are physically draining the stock of US dollars out there, particularly in global markets outside the US. So what's that going to do to the dollar from a supply-demand perspective? Once the market realizes they're serious about draining $30, $40, $50 billion month after month for the next couple of years, how does that do anything other than see the dollar accelerate?